In this video, we're going to look at the power of combining oscillators on two different time frames. Stay tuned. Hey traders, a very warm welcome to you. So you may be familiar with oscillators. We're talking about stochastics, RSI, CCI, that kind of stuff. Basically something that rotates between a low point and a high point. It can't go above. It tends to kind of oscillate around, which is quite a quarter oscillator. And generally speaking, it's going to indicate an overbought or an oversold condition. If you want to find out more about that, I've done a video on stochastics and RSI, which you can go in and check out. What I want to talk about today in this video is the power of combining those oscillators on two different time frames to time or fine tune your trade entry. Let me explain. Okay, so we have a very crude weekly chart here. The price has been chugging along very nicely for several weeks, several months, several quarters, whatever it may be. And in the lower kind of sub axis here, I have an oscillator. And like I say, I don't want to single out one specific oscillator because I believe you can do this for anything, but that could be RSI, it could be stochastics, it could be CCI. They're all relatively similar with their own quirks. You choose your favorite or whichever one you're used to, and if you're using one already, then stick with that one because the familiarity will be there and you can kind of recognize it based on price and what have you. So we have this scenario, price is chugging on higher and we're getting these little dips on the weekly, okay? Little dip here, little dip here, dip here, dip here. Okay, and on the daily chart, this is what it's looking like. We've got the price here, we've got the first dip here, second dip here, third dip here. So 1, 2, 3, and that's where it stops. I've got this final push up here, but forget about that for now. So this is kind of what we're looking at, this section here. Now, our oscillator on our weekly time frame is in an overbought condition. This is a little bit extreme. You're probably going to get little dips under, but generally, you know, if we're using something like a CCI above 100 is overbought. If we're using an RSI above 70, 75 is overbought, etc. You know the kind of rules for your own oscillator. But if we're in an overbought territory in a weekly, that's fine. We know that we're overbought and there's strength in it. It's an uptrend. So what? How do we get involved in it? How do we make some money out of this? What we do is we flick ourselves over to a daily time frame. I'm using weekly and daily here because I'm looking at it from a swing trading perspective. There's nothing wrong with doing it from a daily or an hourly, 5-minute. That's fine, but just looking at this from a swing trading perspective for this video. So we have exactly the same oscillator on here with the same settings, but of course our chart is in a daily time frame. It's showing daily candles instead of weekly candles. So each candle is representing a day worth of trade rather than a whole week worth of trade. In this instance, or in this chart, we have a scenario where we have an overbought condition on our weekly indicating strength, solid market conditions, and we have an oversold condition multiple times on these 1, 2, maybe 11, 1, 2, 3, 3, 1, 2, 3 pullbacks on the weekly chart, which are obviously bigger on the daily chart because the weekly chart might be small, but it's bigger. You've got to give me a little bit of poetic license for this, but I wanted to draw this to explain it in a bit more detail in a broader sense. So how do we trade this? Traditionally, we'd be like, okay, it's overbought, want to be careful. But in trending markets, overbought conditions can continue for a long period of time, as can oversold conditions. So the theory of this is we're overbought condition, fine, but we're in a trending environment. That's fine. We still want to get involved and follow that strength. If we're in a range-bound environment, we obviously don't want to be caught in an overbought condition. But as it's trending, overbought is fine. But how do we tune our entry? How do we get involved on these pullbacks? We go to the daily and we wait for the oversold condition. So the higher time frame has an overbought condition and the lower time frame has an oversold condition for a bull market or an uptrend. We're flipping it and reversing it. If it's a downtrend, looking oversold, overbought. But let's keep it simple for now. All right, so as we go into a daily condition, or daily time frame, should I say, we're going to an oversold condition. Now we're looking to buy. We've saw strength or seen strength on the weekly. The daily is giving us our entry point, these oversold areas that are really sweet spots for us to get involved in. We're now looking to buy. Now, of course, to buy this, we can either wait for it to come back up from oversold, something like that, or we can use another indicator, whatever it may be. The point is, when it goes into an oversold condition, we can basically say, hey, now this is oversold on the daily, but we've still got strength on the weekly. I want to buy this. Now, maybe you scale in over a period of days, whatever your strategy may be. Maybe you wait for it to come back and start to run up. If it's a stochastic, you might wait for the fast line to overtake the slow line. There's a multiple array of that. I'm not going to go into that now, but what I wanted to focus on is this aspect of being overbought, but then being oversold on the lower time frame, using that as an indicator to say, hey, we've unwound enough on the time frame I'm trading, which is the daily, to consider getting involved in it. Now I just need a trigger to get involved in that. So you can use this as a filtering process. If you were day trading, you could say my daily is overbought. I'm trying to find a 15-minute that goes oversold, starts to curl back up, price starts to curl back up from an oversold condition. I'm in, I'm long, I'm going long here. I'm now waiting for it to go overbought again before I sell it. I'm selling it, or maybe you're holding it for a longer term trade. This is the point. It's allowing you to drill down and use the power of that oscillator that's basically worked on two different time frames to give you that entry point. And this is a really useful tool. Even if you don't specifically use it for trading entries, like I say, using it as a filter, and you can say, hey, you know what? I don't want to get long until I see at least oversold on some time frame I'm trading. Otherwise, I feel like I'm chasing my tail. If I'm overbought on a weekly and I'm overbought on a daily, I really am chasing stuff. At least let one of the lower time frames unwind, even that is a 15 or a 5 or whatever it may be, gives you a better chance. And then as it unwinds and then curls back, that's the important thing. Let it unwind and let it curl back. Then at least as well, just very quickly, then you've got a point where you can go long, a position to put your stop. You feel like you've got on the right side of the market because the strength is in the higher time frame. You feel like you've timed it on the lower time frame, and you can quantify your risk a little bit, on that dip. All right, guys, that is combining oscillators on different time frames. Thumbs up if you like this kind of stuff. Subscribe if you haven't yet already. Consider doing so. I'll see you in the next one. Take care. Bye-bye.